Rolex Rings Buyback 2026 Complete Educational Analysis. What if a listed company offers shareholders a chance to sell shares at a price nearly 42% higher than the prevailing market average? Can a company legally buy back its own shares? Why would a profitable company spend 180 crores to purchase and extinguish its own shares? Will promoters participate? Will shareholders benefit? Can this increase EPS, return on equity, and shareholder wealth? Today, we decode the Rolex Rings Buyback 2026 from a Companies Act, SEBI, and investor perspective. Hashtag, what is a buyback of shares? A buyback is a process through which a company purchases its own shares from existing shareholders. After purchase, those shares are extinguished and cancelled. As a result, outstanding shares reduce. Earnings are distributed over fewer shares. EPS may increase. Return on equity may improve. Shareholder value may increase. Buyback is one of the most important capital restructuring tools available to listed companies. Legal provisions under Companies Act 2013. The Rolex Rings buyback has been undertaken under the following provisions. Section 68. Power to buy back securities. Section 68 permits a company to purchase its own shares subject to prescribed conditions. Important conditions include authorization in Articles of Association, board approval or shareholder approval, maximum 25% limit, fully paid up shares only, debt equity ratio not exceeding 2:1 after buyback, buyback through permitted sources only. Section 69. Capital Redemption Reserve. When shares are bought back out of free reserves, an amount equal to nominal value of shares bought back must be transferred to Capital Redemption Reserve. This protects creditors despite reduction in capital. Section 70. Restrictions on buyback. Company cannot undertake buyback if default in repayment of deposits, default in redemption of debentures, default in repayment of term loans, default in dividend payment. Certain non-compliance under Companies Act exists. Rolex Rings specifically confirmed no such default exists. Section 179. Powers of Board. Board of Directors approved the proposal and authorized the buyback committee for implementation. Number SEBI buyback regulations applicable. The transaction is governed by SEBI Buyback of Securities Regulations 2018. Key provisions include tender offer mechanism, record date determination, small shareholder reservation, escrow creation, letter of offer, public announcement, extinguishment of shares, post-buyback disclosures, compliance officer appointment, merchant banker appointment, hashtag Rolex Rings. Buyback. Key offer details. Company Rolex Rings Limited. Face value 1 rupee per share. Buyback price 180 rupees per equity share. Maximum shares proposed 1 crore equity shares. Buyback size 180 crores rupees. 1,800 million rupees. Method tender offer route. Percentage of equity capital. Approximately 3.67%. Percentage of paid up capital and free reserves 20.43%. Funding source free reserves, securities premium, internal accruals, cash balances. No borrowed funds will be utilized. Why has Rolex Rings announced this buyback? The company has officially stated that the buyback aims to return surplus cash to shareholders, optimize capital structure, improve shareholder value, improve earnings per share, improve return on net worth, efficiently deploy excess funds. Instead of allowing excess cash to remain idle, management is returning value to shareholders. Buyback price analysis. Buyback price 180 rupees per share. The board considered historical market prices, volume weighted average price VWAP, net worth, earnings per share, future prospects, financial position. The offer represents premium over 60-day VWAP 41.97%, premium over 10-day VWAP 40.41%. This means shareholders are receiving a substantial premium compared to prevailing market averages. Small shareholder benefit. One of the biggest investor protections under SEBI regulations is reservation for small shareholders. At least 15% of the buyback entitlement is reserved for small shareholders. This often results in higher acceptance ratio, better realization of gains, greater participation opportunity. This provision protects retail investors from being crowded out by large shareholders. Hashtag Promoter Participation. The promoters and promoter group have officially communicated that they do not intend to participate. This has significant implications. More shares available for public shareholders, higher acceptance possibility, strong confidence signal by promoters, potential increase in promoter holding percentage post buyback without acquiring additional shares. Benefits to Rolex Rings Limited. Improved earnings per share EPS. Since total outstanding shares reduce, profits get distributed over fewer shares. Result: higher EPS. The company has projected an increase in EPS after completion of the buyback. Better return on equity ROE. Reduction in equity base often improves return on equity, return on net worth. The company has projected improvement in these metrics post buyback. Efficient capital allocation. Instead of keeping excess cash idle, management returns cash to shareholders. This is considered an efficient use of capital. Positive market signal. Buybacks generally indicate management confidence in future business prospects. Investors often view buybacks as a signal that management believes shares are undervalued. Stronger capital structure. Excess cash reduces while capital becomes more optimized. This often results in improved capital efficiency. Benefits to investors. Exit opportunity at premium price. Investors can tender shares at 180 rupees per share. This provides an immediate premium realization opportunity. Enhanced shareholder wealth. Investors who continue holding shares may benefit from higher EPS, improved ROE, improved valuation metrics, long-term value creation, increased ownership percentage. Shareholders who do not participate may automatically own a larger percentage of the company after reduction in total outstanding shares. Potential market re-rating. Companies with efficient capital structures and improving ratios often attract better market valuations. Important compliance conditions confirmed by Rolex Rings. The board confirmed. All shares are fully paid up. No defaults in deposits, no defaults in debentures, no defaults in loans, no defaults in dividends. Debt equity ratio will remain within statutory limits. Buyback will not result in delisting. Minimum public shareholding will be maintained. Buyback will be funded through internal resources. Company will remain solvent after buyback. Declaration of solvency. One of the most important legal safeguards is declaration of solvency. Directors have confirmed company can pay its debts, company will remain financially sound, company will not become insolvent within 1 year after buyback. This declaration is filed with Registrar of Companies, SEBI. False declaration can result in severe penalties and prosecution. Educational takeaway. The Rolex Rings Buyback 2026 is a textbook example of a listed company using the buyback mechanism to return surplus cash to shareholders while simultaneously improving capital efficiency, EPS, and return ratios. For company secretaries, chartered accountants, CMA professionals, law students, and investors, this transaction demonstrates practical application of Section 68 of Companies Act 2013, Section 69 Capital Redemption Reserve, Section 70 Restrictions on Buyback, SEBI Buyback Regulations 2018, Postal Ballot Approval Process, Declaration of Solvency, Tender Offer Route, Shareholder Protection Mechanisms, Corporate Governance Principles, Capital Structure Optimization. The buyback reflects a balance between shareholder wealth creation, legal compliance, and sound corporate governance. Disclaimer. Viewing this video or accessing the content on this channel are free and does not create any professional, advisory, or client relationship between the speaker and the viewer. The content is shared solely for general educational and informational purposes. The speaker is a member of the Institute of Company Secretaries of India, ICSI. However, the information provided in this video should not be construed as professional advice, consultancy, or opinion under any law or regulation. Viewers should not rely solely on the information provided in this video for making legal, financial, regulatory, or compliance decisions. Any person intending to rely upon or act on the information contained herein should independently verify the relevant provisions of law and, where appropriate, seek professional advice from a qualified professional. The speaker, the Institute of Company Secretaries of India, ICSI, and any organization or listed company with which the speaker may be associated shall not be liable for any direct or indirect loss, damage, or consequences arising from reliance on the information provided in this video or channel. The content shared on this channel is based solely on publicly available information, general legal provisions, and academic discussion of corporate and regulatory frameworks. The speaker confirms that no unpublished price-sensitive information, UPSI, confidential information, or proprietary information of any listed company or organization has been disclosed or discussed in any video or content on this channel. The views expressed in the videos are personal academic interpretations for educational purposes only and are not connected with or derived from any confidential information obtained through employment, professional engagement, or association with any listed company or organization. Nothing contained in this channel should be interpreted as market advice, investment advice, or insider information under the applicable provisions of securities laws, including the SEBI, Prohibition of Insider Trading Regulations, 2015. Viewers are advised that the information shared is purely for general educational awareness and should not be relied upon for investment decisions, trading decisions, or regulatory compliance without consulting appropriate professionals and official sources.